Welcome to day 8 of the Wall Street Crossover Show, brought to you by Tip TV in conjunction with our sponsors Admiral Markets. Gives me great pleasure as always to reintroduce Mr. Darren Sinden, a market commentator for Admiral. Morning to you, Darren.
Good afternoon, Nick.
Now, quite an interesting day, I guess. All eyes on the Federal Reserve again. Decision time, obviously. The dollar's on tender hooks, interest rate decisions on tender hooks, and it's been an excuse not to do anything recently because the outlook is so unclear.
I think you'd be a brave person to have taken a view ahead of today's session, US session. It's stacked with data, and obviously we've got the most important announcement probably of the month.
Or possibly the year.
Well, quite possibly, yeah, depending on what they say. So,
yeah.
A lot of people are on the sidelines today, and that's probably given the market a bit of a dull flavour. A bit like the weather outside today, dull and overcast, and not much.
Unlike your slides. Okay, so let's go to the first slide. We've got the data released over the European session. Let's take a look at that.
Okay, well, I picked quite a bit of data actually out of Europe today, so I've just picked out a few bits that caught my eye. First of all, here in the UK, the nationwide Building Society House Price Index, quite a popular gauge of house prices here in the UK, and this is a year-on-year survey, and basically for April 2015 we saw a 5.2% rise in house prices over the same period last year versus a forecast of a rise of 4.1%. So this is slightly contradictory to data we saw about a week ago, but
suggesting falling prices.
Yeah, but as far as the nationwide survey is concerned, it's still onwards and upwards, and perhaps that's a cause for concern for some. May stimulate a bit of inflation in the economy, which for others would be good news. And then a couple of data points, the many that were released today in Europe. The European Services Sentiment Survey. This is an ECB study, and it talks about just basically how people are feeling in the service industry, one of the biggest components of the European economy, and a more positive read, a read of 7 from respondents to that survey versus a forecast read of 6. So better news there. And again, a similar type of story here in the Italian Business Confidence survey, a read of 104.1 versus a forecast of 103.7. So if you take that and the money supply data and the bank lending data that came out today,
not a bad morning.
No, all in all, good news for the ECB in Europe as a whole. Elsewhere, though, on the periphery of Europe and outside of the Eurozone, Sweden's Riksbank left its interest rates unchanged at minus 0.25%, so negative interest rates in Sweden, but it said yes to more QE. So it's doing between another.
It'd be amazing to see what the books in 100 years' time. So Sweden, down 0.25%. That was a mad time for markets.
Well, they may well do. In fact, the expectation was for the bank to actually trim interest rates and put them into
even more negative.
Exactly.
Wow.
But they didn't do that. But they are going to try and stimulate the economy with up to another $6 billion worth.
That was the printing press. Okay, so let's go on to the FTSE 100 movers.
Okay, well, again, it's been quite an active day in the FTSE in terms of movers and shakers, but I picked out just 3 names here that caught my eye. So Weir Group, first of all, manufacturer of pumps and fluid moving equipment. They had their interim management statement today. If you read it in isolation, I think you probably would have thought it was quite bad news, but it was obviously better than the market anticipated. So they've moved up by 4.1% to top the FTSE gainers this morning. And then the next one on our list is in fact Next, one of Britain's biggest clothing retailers. Never seems to put a foot wrong, this stock, and they had a trading statement today, showed that sales were ahead of forecast once again, and they're up just over 3% as a result.
Just on that, okay, we've traded the markets for many, many years, but historically everyone tried to call the top in Next, and they failed miserably. And as you say, they've got the model absolutely right, haven't they?
They do seem to. There's very little pleasure in shorting Next. All that brings you is a world of pain and an inevitable loss, it seems.
Yep.
And then thirdly, last one on the slide here, Antofagasta, Chilean copper miner, listed in London. They had their Q1 production report today, down 3.3%. Quite disappointing read through on that one. Only a month ago they were linked in a possible tie-up with a Canadian firm called Tech Resources. That seems a long time ago, but perhaps this shows why they need to perhaps amalgamate, because it's all about economies of scale in a very difficult commodity market at the moment.
Understood. Let's talk now about M&A rumours and movers.
Well, it's not strictly an M&A story, but it could become one. You probably saw this already, but Twitter
Down 20% overnight.
at one point down 26%. A bit of a faux pas. There was an early release of their results, which were due to be released after the close last night. They came out or were found on their website about an hour before that, and then they were released by a third-party web crawler. That sent a bit of a wave of panic around the markets, and as I say, they were down at 1.26%, finished up down 18% in late trading. And the reason that they were down, well, it was a big revenue miss. So the revenue was up 74% this time round. It was up 97% in Q4, and user numbers were better. 302 million users, up from 288 million in December. But the fear is, amongst investors, or the feeling is, that the company is not generating a big enough return from those users. So yes, revenues were 436 million in the quarter, which is hardly to be sniffed at. Yeah, that was 21 million less than analysts were looking for.
Okay.
It's burning through cash, and it could be vulnerable here. I mean, it's lost $162 million over the quarter. That equates to 25 cents a share. I think there'll be a lot of pressure on the management to shake things up. One comment I heard recently was the concern about Twitter is, unlike Facebook, that the senior management doesn't really have any real skin in the game, and I think you could well see some activism here, which seems to be the flavour of the month in America, trying to sort of generate some shareholder value and get the business working properly.
Understood. Okay, let's move on to the next slide, the US data points to keep an eye on today.
Well, there's quite a bit of data coming out in the US today, but I've just picked out the two sort of daddy, if you like, daddy data points, if you will. First of all, US GDP for Q1, and that is also forecast to be low. I mean, lower, 2.2% in the previous quarter, which if memory serves, was actually seen to be a bit on the higher side, but quite a big dip back down to a forecast growth of just 1% in the first quarter of 2015. Still growth, and still obviously positive, but it'll be interesting to see if that figure comes in there, and if it does, then whether that will have a reflection in what the Fed will say later at the end of its meeting when it announces its interest rate decision for April. The forecast in the market is for no change. But
as always, it's all about the wording, isn't it?
Everyone's will be poring over the sentiment. The semantics of what Janet Yellen says will be picked apart indefinitely. People will be looking for any clue as to the timing of an interest rate rise. My own guess is that it's later rather than sooner, but of course we'll all be much wiser at 7 o'clock.
7 o'clock London
tonight,
time. Yeah. Understood. Okay, let's go to our final slide, the US pre-market movers and specific chart points to keep an eye out.
Absolutely. Well, I picked out two technology names here, just to give us something to talk about. So Western Digital, probably best known as a manufacturer of hard drives and portable storage. They posted their numbers yesterday after the close, and they came in with an earnings miss and, crucially, weaker guidance. So they're down 1.94% in early trading, and I suspect that they could get pushed lower as the session moves on. But GoPro, very much a stock of the moment, who make the portable action cameras that are so popular with cyclists and snowboarders and skiers and other sort of venture sports people. They're up 11% pre-market after they reported. Guided higher in the conference call, very confident about the prospects going forward. That's what the market likes, and when you are priced for growth, it's what the market wants to hear, and that's been reflected in the move. In terms of levels to watch today, the S&P 2094, 2125 are the boundaries. The Dow 17,922 on the downside and 18,133 to the upside. On the currencies, ranges are getting a bit wider here. Euro dollar, we're looking at 108.88 on the downside and 110.40 on the upside. Euro strength is, and dollar weakness, very much a theme at the moment. And Aussie dollar, US dollar, 78.54 is your downside level, and a new big figure, 80.25 on the upside. Dollar yen still pretty range bound, 118.75 on the downside, but 119.40 is a level to definitely watch for a breakout above on the upside. And then in cable, 152.76 to the downside, and another new big figure, 154.20 on the upside. So sterling's resolute.
It's holding its own, as they say. Okay, Darren Sinden, market commentator, Admiral Markets. Thank you very much indeed for your time as always. That concludes day 8 of the Wall Street Crossover Show. Have a good day. We'll be back same time for this segment at 1 p.m. tomorrow. Thank you.